And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alix Steel. We're counting you down to the closing bell. Here to help take us beyond the bell, it's a global simulcast. Scarlet Fu here in the TV studio, Massar and Tim Stenovec in the radio booth as we welcome our audiences across all of our Bloomberg platforms, as well as our partnership with YouTube to parse the most crucial moments of the day here. Massar and S&P 500 at a record high here on this day, although a modest record high.
Why are you shaking your head, Carol?
Well, record high, but
she's
man,
a disbeliever.
It's super boring.
She's a hater.
I'm just going to say, I'm not a hater. I love, but it just feels a little bit boring. But what was interesting is Abigail Doolittle was in our studio a little while ago and just pointing out that it's interesting that you've got record highs like on the S&P, you see the Nasdaq 100, moving up again, and you look at something like the transports, which continues to be under pressure, and divergencies in different parts of the market. You do wonder what it means when maybe everything isn't more trending in the same way, if you will.
I don't
know.
We just spoke to Gina Bolvin over at Bolvin Wealth Management Group, and she made the point that, yes, everybody's waiting for NVIDIA. And she actually said that NVIDIA has replaced Jay Powell as the market mover.
Whoa.
And then she went, dun, dun, dun. No, she didn't.
What do you guys think?
I mean,
for 24 hours,
yeah,
maybe?
No, I don't know. No, it still has to be the Fed in the direction of the Fed longer term, no?
Yes, longer term, because what the Fed says determines where bonds trade, and that determines how much you're willing to pay for equities. But right now, people are willing to pay all kinds of things for NVIDIA because it's the future.
Tim, who said that?
Gina Bolvin over at Bolvin Wealth Management Group.
So Gina Bolvin over at Bolvin Wealth Management Group out of Boston. I think she's wrong.
Do you?
Yeah.
All right, well.
There you go.
The Fed still matters,
Well, you know what they say about opinions.
Well, you asked for my opinion, and you got it.
How you make a
All
market,
right, there's
people.
how we get the closing bells here in New York on this Tuesday afternoon. Green across the screen, at least for the three major indices, with the Dow Jones Industrial Average up more than 60 points, or about 0.2%. The S&P 500 looks like it is going to close at another record high, 53.21 and change. As we wait for these numbers to settle, that's about 13 points higher, or 0.2% higher than where we were yesterday. The Nasdaq Composite up about 37 points, or 0.2%. Similar move on the Nasdaq 100. Again, those are record highs. But as you alluded to a little bit earlier, still seeing some softness in the cyclical space. Dow Transport's down 1.7% here on the day, and the Russell 2000 closing out the day lower by 0.2%.
Right. We saw the transports below their 200-day moving average. So, for those technicians, certainly something they keep a watch on. S&P 500, back to the big caps we go, guys. Almost an even split in today's session. So 246 actually gaining some ground in the Tuesday trade. Scarlet about 253 lower for unchanged.
All right, let's take a look at the sector performances. And it's a mixed day overall, even as 7 industry groups are higher. A lot of green there. And in fact, the best performers, utilities, up 1%. They're kind of a play on AI, Alex, as you've been talking about for a while, because they get to generate the power that all those big computer networks and data centers eat up. So utilities gaining about 1%. Staples and financials up by at least half of 1%. Your laggards, energy, industrials, and REITs.
All right, guys, let's get to some of the individual gainers, if I may. And interestingly, Tesla is your number 2 gainer in the S&P 500 today, and it's the number 1 gainer in the Nasdaq 100. And I was kind of having a hard time kind of finding any real news. The stock finishing the day just off its highs of the day, but still with a 6.7% gain. Morgan Stanley's analyst reiterating Tesla's an overweight, making the case in a note to investors that Elon Musk needs Tesla more than ever before. As investors question if the CEO's commitment is less or more, we believe Elon needs it more than ever before. Also, what was interesting, and Benzinga Pro was putting this out, talking about how Tesla increased its 72-month loan rate in the United States, saying that is a positive sign for EV demand. So from about 0.99% to 1.9%. So I don't know. Does that mean that that is a positive? Anyway, a real outperformer. So kind of struggling to find a clear, definitive reason why, but nonetheless a real standout in the trade. Also standout to the upside, Dollar General up about 3.5% in today's session, and this again was among top gainers in the S&P 500. Number 4 gainer in the S&P, as I mentioned, up 3.5%. This is as Citi's analyst came out and said there's no sign of a traffic slowdown at the dollar store operator. He rated the stock a neutral. And then one more, Macy's. I gave that actually for you, Romaine, a little bit of a gift, because I know you talked with the Macy's CEO today. But anyway, Macy's was up about 5% in today's session, beating profit estimates in the most recent quarter and raising its outlook for the remainder of the year. So maybe giving the CEO some breathing room. I don't know. What did you get from your conversation, Romaine?
Well, they've really focused on those first 50 stores that they keep talking about, the ones they think are going to be the prototype. That's where the growth was, Carol. I mean, if you took those 50 stores and separated from the rest, that's 3% growth on a comp sales basis. You put those stores back in with the other 300 plus stores here, and you got negative growth.
Big difference.
There it is.
So that's where the growth is. All right, that's the gainers.
Okay, how about some decliners? I do want to start with Palo Alto Networks, falling today by 3.7%. They fell after the company reported earnings after the bell yesterday. They gave a downbeat forecast for the current period. It renewed concern that there's going to be a slowdown, or there has been a slowdown when it comes to cybersecurity. Once again, shares falling by 3.7% today. And shares of Children's Place plunging today, down 20%. It's a kids apparel retailer, got $150 million market cap. It's a small company, but it is down 97% since 2017. They announced that longtime CEO Jane Elfers has left the company. They've named Mohamed Umair as interim CEO. Elfers has been at the company going all the way back to 2010. Before that, she was CEO at Lord & Taylor. And even though shares fell 19.5% today, we can go ahead and round that up to 20%. It's only its worst day going back to February. So it shows how recent big moves have hit the company's stock.
Do you not shop there, Tim? Don't you have
I don't
small
shop
kids?
at Children's
Yeah.
Place. Yeah, we're all
No,
about.
because their clothes fall apart after 3 uses.
I don't know. We haven't shopped there. We're all hand-me-downs. There's so many people whose kids are just older than ours, and we just get the free
circular
clothes.
economy.
Yeah, it's all.
huge.
I don't even know where any of this stuff comes from, but it just shows up. And we dress our kids in it. It's fine. Shares of Peloton also falling today, down by 16%. They fell after the company said on Monday that it's doing a global refinancing, which includes selling $275 million of senior convertible notes that are due in 2029, and then entering into a new $100 million revolving credit facility. Also, according to our own Bloomberg reporting, the company kicked off the sale of a $1 billion loan offering as it works to refi existing debt and recover from a recent slump in sales. This, according to a person familiar with the
Did you
matter.
see the interest rate, though?
Yeah,
They're shopping around.
11.5%.
Yeah, so they're at 12% on that. And I was
Yeah.
looking at the previous. I mean, they were basically servicing around like 2 to 3, and then they had the convertible notes, which were at 0%. I don't know what they're doing here, man.
Yeah, loan to carry interest at 600 basis points over the SOFR rate.
Yeah.
I mean, that's a lot.
Yeah.
Which makes the yield you're getting in the bond market not that exciting. But again, that's kind of risk-free. So taking a look at the bond market, you're seeing yields a bit lower, a bid pretty much across, particularly in the back end. I'm just really looking at the 10-year in particular because last week when it kind of broke below the 50-day, we kind of been bouncing around between the two. And kind of what's going to break us out of that range? Governor Waller said that the CPI for April was a C+. So if we get an A, does that kind of change the trajectory? I don't know.
I want to make a quick comment, though, about the rates, because you kind of were joking about it. But we were talking, I don't know, it was Andrew Slemon or someone we were talking to earlier about the competition between the rates that you get in the bond market versus what you can make in equities. And that's what sort of lead to sort of the FOMO here. But I think people forget, too, it's not just about what you're getting in money markets or in treasuries. I mean, there's a lot of corporate debt out there where you can get comparable results. Now, I'm not saying Peloton is it, but there are plenty of others out there where you can get high single digits and even low double digits without necessarily going into public equities. So.
Yeah, but it's so tight. The spread is so tight. Anyway, sorry, Scarlett.
No,
Sorry,
no,
I didn't
just
mean to bring the party to a halt here.
I was looking at Urban Outfitters earnings because they have just come out. The specialty retailer announcing profit and sales that beat analyst estimates. First quarter, let's see, comparable retail segment sales up 4.6%. Analysts were looking for an increase of 2.9%. And first quarter adjusted EPS 69 cents. Analysts were looking for 51 cents on average. The stock up by 8.5% right now.
Yeah, stock up 16% so far this year. So it's interesting, going to build on that gain. That's a huge pop, man.
Yeah,
that is a big pop.
The company's CEO said that it was driven by continued strength at Anthropologie, Free People movement, and Nuuly brands. Consumer demand remains robust for spring and summer fashion, which bodes well for continued sales growth in quarter two.
So this is also a stock that some analysts wind up really liking and some investors because it's like a specialty retailer. Like it knows what the customer is, it knows how to execute, and it's not like a broad store, say like a Macy's or like a Target or a Walmart. It's very specialized, and sometimes that's good. Sometimes that's bad, and apparently I've been talking to some portfolio managers who like that kind of idea now for Urban Outfitters.
Well, it knows its customer, and it doesn't have to please everyone, which is proving pretty impossible when there's so much uncertainty and when your customers are segmented so much, right?
Yeah, it's very clearly defined. I agree with you, and right, so they know as long as they kind of get the product mix right and their customer stays true, like They seem
Which
to
is not us. Maybe Tim, but not us.
I like anthropology.
Hand-me-downs. Romaine gives me his old clothes that I can wear on air.
It's fair enough.
Still hasn't taught me how to tie a bow tie, but
No, it's coming.
yeah,
I have
right.
to teach you how to tie a regular tie.
I'm looking for that too.
He's never got a tie on. All right, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We will see you again, same time, same place tomorrow.